Is this the market we've been waiting for? Over the course of the past 3 years, the housing industry has been spiraling down from a transaction count. Existing home sales came out this past week at 3.89 million seasonally adjusted annualized rate. Over the course of the past 30 years, only 2 times in the past 30 years has the seasonally adjusted rate been lower than this. It was this past October, and then it was the summer of 2010. So from an existing home count or existing home sales transaction count, this is one of the most difficult times in the past 30 years. Combine that with the fact that over the course of the past 3 years, one of the aspects of our industry that's kind of been propping up the market is new home sales. New home sales have been increasing because new home builders have been able to kind of prop up the values and being able to off seller concessions to help bring down these lower interest rates. That is also starting to slow down. So we've seen 35 consecutive months of existing home sales decrease on a year-over-year basis. New home sales have now decreased 2 consecutive months on a year-over-year basis after following 13 consecutive months of positive movement. So we can see everything is slowing down, or everything has kind of stalled out. And we're gonna look today as to when we can all expect to see some relief. So whether you're a buyer waiting on the sidelines, wondering, hey, when should I buy? I'm letting you know, like, hey, this is the interest rate where you should start to expect to see a flood of buyers more coming to the market, so that it can be more competitive. If you're a seller waiting to sell, when you could expect more buyers, some more offers to come in. Whether you're a loan officer or a real estate agent, when can you start to see some relief in regards to interest rates, or in regards to where you can expect to start to see more transactions from a unit count? So we're gonna look at the past 2 years, 3 years data, because as we know, we've been consistently declining for 3 years in a row. But in the past 3 years, we've had 2 times where existing home sales have slightly risen. It was February of 2023, and it was February of 2024, so 5 months ago. And the reason being is in February of 2022, the reason being is in February of 2023, interest rates spiked at about 7.3%, but then came down to about 6%. And that happened the 4 months preceding. So as I mentioned, they spiked in November, they came down in December to about 6%. That's the drop. And that lead time takes about three months for that lead time for interest rates to drop to that 6%, led to more existing home sales, increased it to 4.5 million, which is about a 20% increase from the 3.8 million we're at now. And right now, in February of this year, we saw interest rates top out around 8%, was about October of last year. Then they came down in December and January of this year, down to around 6.6, right? And that also spiked up existing home sales to about 4.5 million seasonally adjusted rate. Again, another 20% from the low. So all these numbers, I know it's a lot of data. What we're saying is we can now use these as evidence to know what is the interest rate that needs to be out there to really start to drive home sales. And again, you can look at it from so many aspects: buyer, seller, real estate agent, loan officer, whoever it may be. It's around 6.25 less. So once interest rates fall to that 6.25% range, and realistically even lower after that, you will start to see existing home sales start to accelerate, and will start to accelerate the more they go. So at 6.25, you'll see about a 15 to 20% increase in buyers coming off the sidelines. You fall lower than that, you're probably gonna start to see a 25 to 50% increase in buyers waiting off the sidelines. Right now, according to Mortgage News Daily, we're around 6.9%. So again, we're about 3/4 of an interest rate off of where we need to be. But overall, we know the Fed is going to cut rates. It's about 100% now. The CME futures are 100% chance that are going to be rate cuts in September 18th. Does that directly move mortgage interest rates? We'll have to stay tuned and find out. It should theoretically bring down the mortgage interest rates. Doesn't necessarily mean it will, but it likely to. So again, we're at 6.9 today. Fed's cutting September 18th. We know we need to get to that 6.25 range. When we get to that 6.25 range, you're gonna start to see a lot more demand of buyers coming off the sidelines and want to buy, a lot more transactions. So overall, positive news from the housing industry, because we're trending lower, we're at the end of this cycle, And if you're buyer waiting on the sidelines, know again, there's gonna be more competition as soon as rates fall to that 6.25 range. And if you're a seller waiting, know that, hey, we're right around that corner. You know, we're gonna be there, so stay tuned. Interest rates are going to fall, or likely going to fall, which should increase transactions.